Okay, so today there was FOMC, and the FOMC has turned everything upside down. We are starting to see more bearishness coming through to the market. So FOMC, what does it mean? I didn't listen to the press conference, but for FOMC, there was interest rate decisions. We're gonna get to that. So interest rate decision that they stuck with, they kept interest rate the same at 4.25%. Okay, the forecast was lowering of interest rate. Whoever had this thing expected this, but no. Yeah, the forecast, something doesn't make sense. Hold on. Yeah, they kept the interest rate the same. The forecast was 4.5, they kept it at 4.5. Yeah, the forecast was 4.5. So I think there's a mistake here, but I'll correct it. So forecast was 4.5, and we held at 4.5 in terms of interest rate. Um, we didn't get the lower interest rate. However, due to the interest rate projections, due to interest rate projections, in this case, uh, the next projection is the fourth quarter of 2025. And the only clear thing that we see in these projections, it's the fact that the US, we're expecting a 4.0 by the end of the year, which means we're expecting a no decrease in interest rate. We're expecting 1 basis point cut by 0.5%. But that might not happen. Because if you look at today's decision, and if I listen to the FOMC, I would have told you, but definitely what the market right now has just told me by mere looking at the decision of keeping it the same, and we see uh what is this? We see Nasdaq, the price action of Nasdaq, it just kept on going lower, kept on going lower, kept on going lower. And if we look at the dollar index gain strength, so that told me that the market has priced in the fact that we might not get rate cuts, and that's very bearish for stocks. So for those that know, it's very bullish for the currency itself, but very bearish for stocks. Hence, with the FOMC decision, uh, we saw this move to the downside. Even though when you look at the 1 hour time frame with 1 minute time frame, you think it's too much. Let's go to 5 minutes. Let's go to 4 hour time frame. In fact, look at that. Immediately after the decision, we saw that move. Look at that. Kept higher, all went down. We all went down. Look at that decision. So it's telling us that the price action right now, or the market, it's already pricing in possibility of not getting rate cuts this year. And if we're not going to get rate cuts, we're going to see indices coming back perhaps to retest these resistant areas, because whatever is happening here, it's not something that I want to look for longs on. So we're gonna come back maybe perhaps to this resistant areas where S&P 500 also might be coming into the support areas. Dow Jones already is reacting there. I'm contemplating of buying Dow Jones right now. Oh yes, I should buy. Oh yes, for long term. Okay, okay. I have money on my ETF. I'm thinking of buying an ETF. Let me see. I'm gonna buy an ETF. Sorry. Indices, funds, USDT. Okay, let me do this. Search. I'm just gonna look for an ETF to buy, ETF that trades Dow Jones. Then tomorrow morning, I'm looking to buy that Cetrix. We have a Nasdaq one. We have a USDT one. We don't seem to have it. Okay. Cetrix, what we don't have here. Since we don't have, I think I'm gonna buy directly. I'm gonna look to buy here. I'm gonna look to buy this. I'm gonna look to buy this. I'm looking to buy that. But anyway, so yeah. So basically, sorry, I was just thinking. So basically, with this moves, it's telling at the price action or the market is pricing for a non-rate cut. Yeah, for a non-rate cut, yeah. And I am gonna continue being bullish for this indices. However, I personally know there is possibility for non-rate cuts this year. So I will take note of that. But anyway, so that's what I wanted to speak about, the reaction that the market has pressed in for non-rate cuts this year. I wish I would have listened to the FOMC. I don't know what I was thinking. I didn't listen to the FOMC. So that's why I missed if Paul sound dovish or hawkish. But other than that, I'm convinced by the price section of the market that he sounded like we might not get rate cuts. And if we don't get rate cuts, we are if we don't get rate cuts, if we don't get rate cuts, the market might start getting lower prices for Nasdaq before we continue going up because it was not ready for that. But other than that, that was what I was talking about, the reaction, the post reaction after interest rate decision and FOMC. So yeah.